guys, this is the Investment Venturer, and welcome to the Investor Next Door podcast. Today we'll be discussing how to evaluate companies before investing in them. I should let you guys know that anything said on this podcast should be used for information and entertainment purposes only. This is not investment advice, and I do not recommend diving into any project or trying any strategy without doing your own research first. Evaluating companies before investing is a crucial step to help reduce risk and improve potential returns. Here's a straightforward framework you can use, often referred to as fundamental analysis. Understanding the business. What does the company do? How does it make money? Is it in an industry you understand or want to learn about? Financial health. Look at the company's financial statements, found in annual reports or on sites like Yahoo Finance, Morningstar, etc. Key metrics. Revenue. Is it growing year over year? Net income. Is the company profitable? Earnings. Per share, EPS. EPS shows how much profit a company makes for each share of its stock. It's a key indicator used by investors to assess a company's profitability. Higher and growing EPS is good. Debt-to-equity ratio, a measure of financial leverage. Lower is generally better. It measures how much a company is financing its operations through debt versus shareholders' equity. It's a key indicator of financial leverage and risk. Free cash flow, FCF, cash left after operations and capital expenses, positive and growing is ideal. Valuation. Compare the stock price to the company's earnings and book value to see if it's over or undervalued. Price to earnings, PE ratio, lower than peers might suggest a deal, but check growth prospects. The PE ratio is a widely used valuation metric that compares a company's current share price to its earnings per share, EPS. It tells investors how much they're paying for $1 of the company's earnings. Price to book, PB ratio, compares a company's market value to its book value, net assets. It shows how much investors are willing to pay for each dollar of a company's net worth. PEG ratio, PE adjusted for growth. A PEG less than 1 is often considered attractive. Earnings per share, EPS, measures a company's profit per outstanding share. Dividend payout ratio measures the percentage of a company's earnings paid out as dividends. Dividend yield measures the annual dividend per share divided by the stock's price. Competitive advantage, moat. Does the company have something unique? Brand, tech, network effect, patents, etc. Can it protect its market share from competitors? Management quality. Look up the leadership team. Do they have a solid track record? Are they transparent and shareholder-friendly? Industry and market trends. Is the sector growing? What are the major trends that might impact the business? How does this company compare to its peers? Risks. Regulatory, economic, competitive, or operational risks. Global exposure, especially for geopolitical risks. Bonus, red flags to watch. Declining revenue and profits, excessive debt, frequent changes in management, overpromising in press releases with little delivery. Let's dive into a popular company that we all may have heard of. Apple, traded on the NASDAQ under the ticker symbol AAPL. Apple has a market cap of $2.83 trillion. Market capitalization, or market cap, represents the total value of a company's outstanding shares in the stock market. It's calculated by multiplying the current stock price by the total number of shares. Companies are categorized under different categories of market cap. Small cap, companies with a market capitalization between $300 million and $2 billion. Mid cap, companies with a market capitalization between $2 billion and $10 billion. Large cap, companies with a market capitalization between $10 billion and $200 billion. Mega cap, companies with a market capitalization of $200 billion or more. Apple is considered a mega-cap company. Understanding the business, Apple Inc. is a global technology company renowned for its innovative consumer electronics, software, and services. Its flagship products include the iPhone, Mac, iPad, and wearables like the Apple Watch and AirPods. The company also offers a suite of services such as the App Store, Apple Music, iCloud, and Apple Pay, contributing to a diversified revenue stream. Financial health, revenue, and net income. For the fiscal year ending September 28, 2024, Apple reported quarterly revenue of $94.9 billion, up 6% year-over-year. The quarterly diluted earnings per share, EPS, was 97 cents. Excluding a one-time charge related to a European General Court's state aid decision, the EPS was $1.64, a 12% increase year-over-year. Free cash flow, FCF. As of December 31, 2024, Apple's trailing 12 months TTM free cash flow was approximately $98.3 billion, indicating robust cash generation. Valuation metrics, price to earnings, PE, ratio. As of April 4, 2025, Apple's PE ratio stood at 29.90. This is higher than the historical average, suggesting a premium valuation. PEG ratio. The PEG ratio, which considers the PE ratio relative to earnings growth, was 1.70 as of April 4, 2025. A PEG ratio around 1 is typically considered fair, thus 1.70 may indicate a slightly overvalued position relative to growth expectations. Apple Incorporated, AAPL, currently offers an annual dividend of $1 per share, resulting in a dividend yield of approximately 0.53% as of April 4, 2025. The company distributes dividends on a quarterly basis, with payments typically occurring in February, May, August, and November. For instance, the most recent dividend was declared on January 30, 2025, had an ex-dividend date of February 10, 2025, and was paid on February 13, 2025. Competitive advantage, moat. Apple's competitive advantages include strong brand loyalty, a robust ecosystem of integrated products and services, and continuous innovation. These factors create high switching costs for customers and a sustainable competitive edge. Management quality. Led by CEO Tim Cook, Apple's management team has a track record of operational excellence, strategic acquisitions, and effective capital allocation, contributing to the company's sustained growth and profitability. Industry and market trends. Apple is investing in artificial intelligence, AI, to enhance its product offerings. The upcoming iPhone SE is anticipated to feature Apple Intelligence, a suite of AI tools aimed at boosting competitiveness, particularly in markets like China. Additionally, Apple's restrained spending on AI data centers compared to rivals may result in higher free cash flow, allowing for substantial stock buybacks. Risks. Potential risks include regulatory challenges such as the one-time $10.2 billion income tax charge recorded in Q4 2024 due to the European Commission's state aid decision. Additionally, increased competition in the technology sector and reliance on the iPhone for a significant portion of revenue pose challenges. Conclusion. Apple Inc. demonstrates strong financial health, a solid competitive position, and proactive management. However, its current valuation metrics suggest the stock is trading at a premium. Potential investors should weigh these factors against their investment objectives and risk tolerance. Thank you for listening to my podcast. Be sure to subscribe to the Investor Next Door podcast on your favorite podcast listener. If you're watching on YouTube, be sure to like and subscribe for future episodes. Follow me on social media to stay updated. Twitter X @InvestNDPod. Instagram @InvestNDPod. Share this episode with your friends if you've learned something valuable from this podcast, and I'll see you guys next time.